Lululemon, the fashion brand retailer manufacturer from the States, has been a great growth stock now for nearly over half a decade, and recent times maybe not doing so well. It's been a bit more bumpy, and we've got earnings out in the next couple of days, which is going to be an interesting time to see where they lead the future price direction to. So I'm going to dig into the charts, a technical analysis, to see and try and assimilate where they're going to be moving to next, and also throw in a few trade ideas to get you thinking as well. So with that, let's take a look at that analysis. So from the weekly line chart, we can clearly see Lululemon is a great growth stock from 2017 up to the end of 21, up over 800%, then pulling back nearly 40%. It's been a bumpy ride over that journey. That yellow box area there around the $145, $150 mark, 23.6% Fibonacci line, proved an area that the price sort of consolidated at, traded at, and then pushed on upwards, and then pulled back in early 2022. So proving a key area of support before pushing on upwards. And then I've shaded that pink area, shaded the pink area on the 61.8% line, which is about $311, where there's a lot of price activity, and I've marked that with 4 pink arrows, where you can see the price pulling back to about $300 before deciding to bounce on upwards again. And that then on the third one there from the left pushed on towards those highs before that pullback. It again bounced on that 300, and this time more recently it's broken down below and just heading back up towards again. So a key significant area, this $300 mark, and with earnings just round the corner, we could see price action in either way. So maybe a straddle trade might be interesting over the next few months, but it's got to put in some decent results in the next couple of days on earnings to get it back towards those highs. Any doubts, and that 38% Fibonacci line around $200, $210 could be calling. And if you're looking for a reversal to the downside in the shorter term, 4-line break chart here has got some numbers for you. $272.50, a bit more aggressive, and $255.50 to the downside. You can see that pink little box down there with the E in it. That's the earnings coming up very soon, but a couple of numbers to downside there for you. Then if we head on towards the daily Heikin Ashi chart, then we can clearly see signals at the bottom, bearish, volatility picking up in the last few weeks, up from its average of about 50% to high 80s. Volume really not doing that much more, in correlation with the volatility there around its longer term moving average. Now we head on to the price action, and our long term probability power box giving us an 82.2% chance of a price increase area. We marry that into the institutional power zones, those red dashed lines, which are good support, resistance, target sort of areas. We can see it bouncing out as a tick. Unfortunately though, we got a trend in the short term down at the moment. That's that red shaded area, so that negates that trade. We wait till it flips green before we get excited, and we currently have a sell signal outside the 2 pink line box breakout setup. So overall at the moment it's got a bit more of feeling of weak, bearish, maybe at best a bit of neutrality to the price at the moment as it heads into its earnings. And then finally we've got our Renko chart, used a $5 block size. At the moment DMI at the bottom there is bearish. The other signals, the shorter term ones, a bit more bullish, so neutral overall. Trend has been down, and that's created some Fibonacci trend levels, and to the downside it breaks under the 250 area, where we've seen the 38.2% line on the Fibonacci setup on the weekly chart, and we've got it down here, a serious fall down to $200 and then to $160. And upsides, well, we've got 340, 390, 480 if it can really put in a good performance, reverse this sort of medium term downtrend that it's currently in. So some trade ideas then using the First Trade Broker Options Play Simulator. Got a bit of a selection for you here. Now first one up is a bit of a punt. It's buying the September 340 calls. Now I've put in $10,000 of hypothetical money into this simulation. That trade will cost you $1,655. Now it does have to move a bit to obviously make you some money, and we're going to move that around, see where we need to get to and what's realistic. Well, if the price can get up to those highs back in April, which wasn't that long ago really, you're looking at a near 300% return, a profit of nearly $5,000. Now if you're still bearish, our second trade there is a September 300 strike put, and again messing with the simulator if you want to make money out of it, and it gets down to the low $200. Again, you could be looking at $5,500 profit, 156% returns. That's pretty decent. Now last up is the straddle trade, and I've put it out to September just to give it a bit of time to work. You don't want to be eating up the costs. The expiries were too short term for me, for the others, and really this trade here, although we've got earnings coming up on 2nd of June, it might be a bit too late for that, but with the price where it is and reasonable volatility in the stock, then we're unsure which way it's going to move, then this could be a reasonable trade to have. It's expensive, $6,770, most expensive one there yet, but if again we mess around with the price to the upside, it goes to $430, $435. We're looking at a near 100% profit, $6,493. To the downside, it goes to, let's say $200, 50% return, $3,644. So it might be a bit more risky, this trade, but if you're not sure which way the price is going to go over the next few months and you think it's volatile and it's going to move, then maybe the straddle trade could be for you. So there are a few ideas to get you thinking about how to play Lululemon. So in terms of score then, I'm going for bearish overall. Now I've got to say it was a close run thing between weak bearish, and he's on the borderline there, so only just marginally full bearish, and with earnings coming up in a couple of days time that might change the scenario again, but currently from what I can see from the technical analysis, bearish overall. The Renko is slightly stronger than the Heikin-Ashi chart, and we've got some bearish 4-line break chart entry points for you in the top right, and our probability power score 82.4% chance of an upside. Only that red T holding that trade back. Once it turns green, then it might be worth thinking about. Now in terms of targets, pretty decent either side, 3.6 to 1 and 5.2 to 1 to the upside, and 5 to 1 and 6.33 to 1 to the downside, but at the moment it's a bearish score. It'll be interesting to see where this week's earnings takes the price of Lulu. Bullish, bearish, over the next weeks, months. Be interesting to find out where it goes. Let me know in those comments below where you think it's heading next, and if you've got any other stocks or any other markets for that matter you want me to take a look at, please let me know also in those comments below, and I'll see what I can do. Well, if you liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons, and all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.